Managerial accounting, also referred to as management accounting, is a concept of providing the business the best and decisive decisions in order to achieve their goals. Management accountants have to seek out the internal financial or non-financial information so that the process of planning, controlling, and decision-making can be done. Managerial accounting also helps to plan for the future of the business in order to determine whether or not the planning and decisions they're making are accurate enough in order to avoid hindering the performance of the business in the future. This increases efficiency and productivity. The ones who's responsible for the provision of information are management accountants. Managerial accounting applies to services, trading, and manufacturing businesses. Also, it applies to businesses as well. All forms of businesses, organizations, namely proprietorships, partnerships, and corporations. So, let me give you an example of managerial accounting. For example, Ahmad is the CEO of a small firm and requires both managerial accountant and financial accountant. He makes a list of all the requirements and all the tasks each should perform. First, preparing cash flow statements. Second, income statement report. Third, budgeting. Fourth, calculating changes in the stockholder equity. And fifth, calculating taxes for their organizations. Managerial accountant is remotely in charge of budgeting as well as taxes, whilst financial accountant are responsible for the rest.
Alright, I will be explaining about managerial accounting and financial accounting.
First, users and decision makers.
The target audience for the managerial accounting will be used by the internals. Basically, will be used by the managers. Whereas the financial accounting will be used by the external parties such as the creditors and investors.
Next, purpose of information.
Managerial accounting is to help the managers in making decision, planning, and control business operation. While the financial accounting is to assist the investors and creditors in making investment, funding, and making decision for their credits.
Focus and time dimension of the information.
Managerial accounting will help the managers in preparing the future project and estimates, such as the estimate of the budget. It will focus on the future. Apart from that, the financial accounting will focus on the historical and the past information.
Then, type of report.
Managerial accounting is a flexible and special reports with no control by the GAAP. Instead, it was controlled by the IRFS, whereas the financial accounting is controlled by the GAAP and must be complied with the accounting standard.
Lastly, the scope of information.
Managerial accounting details the reports of project and subdivision of the company, often daily or weekly. The scope is much more narrow compared to financial accounting, which is the process of summarizing and analyzing an entity's or a company's financial transaction, usually in a quarterly or in annual basis.
Now I'm going to talk about inventories in manufacturing companies. Why I specify manufacturing companies? Because manufacturing companies is slightly different with merchandising companies. Manufacturing companies produce goods from raw materials into a sellable finished product. Meanwhile, merchandising companies buy completed product and sell them to the public. Financial statements for manufacturing companies is differ with merchandising companies. They must show the types of inventories in the current asset section of the statement of financial position. So I'm going to show you the three types of inventories in manufacturing companies. We've got raw materials, we've got work in process, and we've got finished goods. I'll give you an example. Let's say we have a Rolls-Royce company and it is a car manufacturing company. Before they build a car, they need some raw materials like steel, tire, and etc. When they have all the raw materials that they needed, then they can jump to the next step. Work in process. We've done some work to the steel or whatever the raw materials are. We've done some work to it, but it's in process. That means it's not finished yet. So we purchase the materials, we apply some labor, overhead, whatever, and we do something to the materials. We can't just say it's raw materials because we've done some work to it, but it's not completed yet. It's like a partially assembled unit. Once we actually complete it, that's where we get into the finished goods. It is actual unit that ready to be sold.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Haziq Mukri bin Hamim Shahrum, and today I will be conducting a presentation on the topic of Introduction to Managerial Accounting. Without further ado, let us begin. Okay, so as you can see for the monitor here, I'm going to be presenting on the subtopic of manufacturing cost elements, which can be divided into three basic costs, which are direct materials, direct labor, and manufacturing overhead. So without further ado, let's see what these things are. Okay, so the first part in which I'm going to touch on is direct materials. Okay, so direct materials are materials that can be traced in the finished products and can be seen in the finished products. But some things like glue that can be seen in finished products are not classified as direct materials, as it is classified as miscellaneous materials. For example, you see this globe right here. It is made out of plastic and glue that holds it up. Plastic is direct materials, but the glue is the miscellaneous materials and it's not classified as a direct materials. Alright. Okay, while we have direct materials, we also have direct labor. Direct labor refers to the efforts of workers to physically and directly change the raw materials into finished products, and this can be traced in the finished products. You see the pattern here? Anything direct can be traced in the finished products. What is classified in direct labor, you may ask? Salaries and wages are classified in direct labors. Other form of labors that cannot be traced to the finished products is not classified as direct labor. Okay, finally we have manufacturing overhead. Anything that cannot be seen and traced in the finished products is classified under manufacturing overhead, such as indirect labor, indirect materials, and depreciation. Furthermore, manufacturing overhead is also known as factory overhead and indirect manufacturing costs.
So, in addition, the total direct material cost and the total direct labor cost are known as the prime cost, because both of these have direct association to the finished product. Furthermore, both direct labor and overhead costs are known as conversion costs, because they are expenditures incurred in the process of converting raw materials to finished products.
Thank you for your time for listening to my presentation. I hope you understand it fairly well. Now we move on to the next presentation.
Hi, Assalamualaikum warahmatullahi wabarakatuh. I am 191838 Muhammad Faisal Faris bin Muhammad Faisal, and right now I'm going to talk about period costs and product costs. The term of these two, period costs and product costs, are particularly important in the development of the manufacturing entity's income statement. Okay, so what are these two? Okay, first of all, let us go to product costs. Product costs are the cost of producing the tangible assets intended for sale. Okay, they include the direct materials, direct labors, and also manufacturing overhead. Okay, so to make it simple, in product cost, the cost that I'm going to calculate is the direct materials, which is the raw materials that used to produce the product. Secondly, we must have the direct labors, which is the labors to produce the product, and lastly, the manufacturing overhead such as utilities. Okay, so next we're going to talk about period costs. Period costs are identified with the specific timetable because they are non-manufacturing costs or operating costs that are always expensed, in which the period they are incurred. Okay, these period costs were not included in the inventory valuation. To make it simple, the period costs are classified as selling and distribution, administrative, or finance according to the functional nature and expense in the period incurred. Okay, so what we can conclude is we have a formula which is product cost equals to direct materials plus direct labors plus manufacturing overhead.